Bitcoin is once again retesting the major 44.2k horizontal resistance. Is Bitcoin about to see an explosive break toward the upside, or are we in store for another short-term correction? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at Bitcoin from a short-term perspective. By the end of the video today, you will have a detailed and comprehensive understanding in regards to the current price action and of course, what to expect next. We'll also be going over the macro charts, the 4-year cycle, the total cryptocurrency market cap, and of course doing a complete technical and structural analysis on the charts we review. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion. Pure, raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. This is a place where you get access to charts, updates, videos, educational posts, essentially everything I can't go ahead and post on YouTube, I'll chuck in here. If you're interested in joining our VIP group, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis, including access to our general chat, our trading chart and education chat, our news, our help, our trade setup, and our video chat. If you're interested in getting access to all of that with over 600 members, contact me in the pinned comment of the free channel to find out more info. Let's dive right into the video, guys, starting on that market data. So how are we looking for today? 24-hour volume is down 45%, still sitting at quite a considerable amount at 122 billion. 24-hour liquidations have dropped 80.7%, and again guys, that is not really too absurd considering the fact liquidations went up to around 700 million in the last 48-hour period. In the last 24 hours, only now sitting at 125 million. Looking at the overall volatility index on the 60 and 30-day period, we haven't seen too much change, as it does take some time for that volatility index to actually account for the most recent surges in price action. So overall, not all that much has changed on the 60 and the 30-day period. Moving over to those liquidations of the 125 million, a total of 49 million came from longs and 75 million came from shorts as Bitcoin approached and rallied back up to retest the bullish trigger point slash the major high time frame slash short time frame resistance at 44.2.3k. So we're going to be coming back to this chart in just a moment, but before we do, back over to the DXY. The DXY has officially retested a considerable 2-month-long downtrending resistance. As we can see, we have seen a bounce from our major horizontal support at around that 100 to 101 zone. This area has provided support on the daily chart numerous times in the past, once over here, twice over here, and 3 times over here in April 2023, finally bouncing once more on the 4th time, actually a few days ago. So we've been in an uptrend on the short term for a couple days now, but overall we are still in this 2-month-long downtrend, and the downtrend will remain intact provided the DXY remains underneath this downtrending diagonal resistance. If at any point the DXY breaks above this resistance, we could see a reversal develop for the DXY, facilitating a continuation upwards, potentially as high as around 105, 105.5 to retest this horizontal black line. This of course would be very bearish, okay, for traditional assets and potentially for Bitcoin. Now, there are other drivers of price action that can actually result in asset prices rising, even in light of a rising DXY. Mainly, this would be other drivers such as the ETF news. Even if the DXY goes up considerably and we see the stock market correct considerably, we could see Bitcoin continue upwards if we do get an ETF approval or more ETF hype comes out, awaiting a potential approval or moving into that deadline. So it's not the be all and end all, but it is definitely something we should consider, as it does set a considerable chunk of the perceived systematic risk and actual risk in the market at any time, if of course the US dollar is gaining actual value. So definitely keep an eye on that, guys. If we do see the DXY drop over here, we could see again a continuation for these traditional assets. Moving over to the S&P 500, we can see with the dropping DXY, we have seen one red week now of 22 hours remaining on this weekly candle, a weekly close underneath the lower range, okay, of this red zone, which is our resistance, which is sitting around 4,760. A weekly close under that level marks this move as deviation from the range, deviation from the high. This is a reversal sign. This would actually indicate a reversal is coming for the S&P 500, and we could actually see a bounce. Flipping the chart, you can see this would be a very strong indication of a potential bounce coming for the S&P 500, which of course would automatically flip the chart into a short-term downtrend. Where would we expect the price action to continue down towards? The next logical area would be the next level of support. That would be this level right over here, sitting around 4,600. So we could see a considerable correction over here in the coming weeks if that DXY continues to gain strength. Looking at the Dow Jones, a very similar situation over here. However, we did see a stronger continuation for the Dow Jones in comparison to the S&P, actually pushing up to create a new all-time high at around 38,000. A correction will take us down to the lower area of support, filling this gap we've developed on the VRPV, taking us down to around 36,700 or potentially 36,400, only really flipping considerably bearish if we do lose that 36,400. So definitely keep that in mind. If we look at the macro trends for both these assets, we are still in an overall macro uptrend, provided we remain above this diagonal trend line. So even if we see worst case scenario, which is a full-blown correction, we could see a full-blown correction down to this level. Technically, that would be your next entry opportunity if we do see a correction that low. The same goes to the S&P 500. We do have this macro uptrending support line, which we are definitely keeping our eyes on. So let's go ahead, guys, and jump over to Bitcoin. And in today's video, we're going to be discussing the total cryptocurrency markup. I'm not too sure what happened to my chart over here, actually. It looks like it's kind of glitched out. We'll go ahead and revise that in a second. We're going to be taking a look at the short-term price action, giving you guys a bunch of plans to prepare for the next move, discussing what is happening from a technical and a structural perspective, and of course going over the weekly/daily chart and finishing up with the 4-year cycle. So before we get into it, a quick word from Bitget and BingX, and we will dive right in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump on right in. So the short-term price action is by far and large probably the most pressing matter for Bitcoin right now. As we can see, we have been in this horizontal range for now, coming up on actually nearly 4 full weeks. We entered this range and created the first high on the 6th of December 2023. We are now the 5th of January 2024, so just under exactly 4 weeks, we have been in this sideways consolidation. And this sideways consolidation is quite a large one. The range of movement within this particular range is by no means small. If we take a measured move or we look at the actual price range, it is around about a 9.3% range. So within this potential, or should I say within this 4-week consolidation phase, we have seen a lot of large swings for Bitcoin. However, we do have to understand, even though we've seen these swings up and down and up and down, we are still within what we would call a neutral consolidation pattern. And this would be actually a slightly bullish consolidation as we entered this parallel consolidation from the bottom side up. when we take a look at horizontal consolidations, generally the direction of entry into the consolidation is the direction of exit. Now, that is a very broad statement. It is not applicable to every single consolidation. However, when it comes to parallel consolidations, there is a very slightly higher bias toward the directional continuation based on the direction of entry. So when we look at parallel channels, when we see a move into the channel from the bottom side up, we should automatically be assuming that if we do get these breaks toward the top side, we are looking for continuations rather than deviations. There was one different exception in this instance, which we talked about a few days ago, which was if we did see a break back below this range, that would be marking this as deviation, and we would see a correction towards the range low, which is exactly what we did see. However, excluding this as this was deviation, if we ignore that, we are now still retesting this upper range of resistance. You can see we've retested it once more in the last couple hours. So what is Bitcoin likely to do next? What does this mean, and how can you plan and prepare for potential future moves? So first and foremost, resistance is resistance until it is not. From a structural perspective, there is no reason why we should automatically assume this is going to lead to a breakout purely from a structural perspective, besides having a slight bias toward the breakout due to the directional entry of the price action. Meaning, to go ahead and kind of expand on that, resistance is going to be resistance until it is not, and therefore the closer we get to the level of resistance, the greater the probability of a reversal downwards starts to develop. It is only when we take a deeper look at how the strength of the price action is developing, the technicals behind the price action, can we then assign probabilities towards potential breakouts or pullbacks at any particular time. So let's go ahead and take a look. From a structural perspective, if we do see a break toward the upside, taking a measured move of the range, applying it to the perceived breakout point, we are looking for a continuation upward into the next major resistance, sitting at a price range of 46 to 48k. That is still going to be the perceived target from the breakout of this horizontal consolidation, which as a matter of fact is the high time frame resistance that we have on the macro charts, and in fact the major point of resistance which the 200 EMA retested on the weekly prior to massive correction in the entire market all the way back in 2022. This marks 48,000 to 46,000. So a major point of interest on the macro charts. Moving back to that short-term chart, guys, we can apply the measured move to both directions. If we see a break toward the downside and a failed hold of that lower range, the measured move toward the downside is going to take us sub 38k, actually pushing us into that 40 to 38k support level. As we know, measured moves provide nothing more than a range of which the price action will move in until it reaches an area of support or resistance. So although the measured move is suggesting we could see 36.8, it is highly unlikely that we would see one directional move from this structure below 38 before we create a new structure or new structural formation or new consolidation within this area of support. And therefore we can say a breakdown of the parallel channel will take us as low as potentially 38,000. A break up of the parallel channel could take us as high as potentially 48,000. So those are the ranges we are working in. What does it mean to break upwards? If we break upwards to 48, it really doesn't mean too much, as we are still underneath that major high time frame resistance we know as that 48k level. If we look at the 48k level, the 48k level is really going to be that major point of macro monthly resistance that we need to break above to enter a bull run. So we discussed this a few times, we discuss this actually quite often. If we look at this chart over here, which is our 4-year cycle chart, we can see this dashed trend line. The dashed trend line is a trend line of utmost significance. Moving over to the monthly chart, that dashed trend line you can still see is very much present over here. The dashed trend line is reflective as the major macro monthly resistance or the dead cat bounce high after the all-time high of the prior cycle. Every single time we break a monthly candle close above that dash trend line, we end up entering an official bull run. Now, We are still in a macro uptrend. The charts are still bullish. Of course, we have to be monthly bullish and weekly bullish and etc. before we can enter a macro monthly uptrend or a bull run. So this dotted trend line is going to be reflected as that 48k level. Now, I had a few people ask me, well, why are we in a bull run when we break up that level? How can we actually define that to be a bull run? So there's a few things we look for a bull run. I'm not going to get into them today, but how can we define it as a bull run? That's a very easy question to answer. The most simple way to assess trend strength is to look at the trend angle, the angle of which the price action is moving in. If we do an angle analysis, okay, from the lows toward that dotted trend line, and then from that dotted trend line toward the all-time high, we can see the angle of the trend significantly increases. There is a significant surge in that trend angle the moment we close that monthly candle above that dotted trend line. We can see a shift from 38 to 70 degrees, from 35 degrees to 56 degrees. And this is on a monthly chart, so we know it's a high time frame or an extended trend that has a significant shift in the angle. What is the angle reflective of? It is reflective of strength. What is strength? It is a period or an extended period of increased volume, increased velocity, increased momentum, increased buying pressure. When we expand that to a multi-month or a year-long period, and we have a year-long period of extensive volume, extensive momentum, extensive all that kind of stuff, that is what we would define the price action to be in an official bull run. Furthermore, when we couple that with the 4-year cycle concept, we are looking for a bull run to start in that 4th year of the 4-year cycle. So going over to the cycle phases, we can see first cycle, second cycle, third cycle. We have year one. Year one is generally that capitulation phase. We create that new low at the end of year one. We have year two, which is more or less a consolidation year. We more or less push sideways in year two. And year three, we have when the trend is starting to develop strength and when we have the halving. So we start to enter that bull run territory. And year three is when we create that all-time high, guys. So we're definitely keeping that in mind too. That is going to be happening in the crossover point of year 3 to year 4. We are going to see the break of that dotted trend line as we have seen in that year 3 period in the past. So the bull run officially starts in year 3. However, in year 4, we get that all-time high. So guys, let's move back to the short-term charts and discuss why the downward move is a move of significance, but what we're really looking for if we do break down. So as we said already, we talked about the upward move, we talked about why 48k is significant. Let's talk about the downward move. So like we said, we do have a measured move that could take us to 38,000. 38,000 is a very key level of support that we absolutely need to hold to maintain the current trend. If we take a look at the 38k level, we have got the 50 EMA sitting at 40k, we have our uptrending diagonal trend line sitting around 40k, and we have the horizontal basis support sitting at 40,000 to 38k. A break below this level, will result, if we flip the chart, in a reversal back upwards to retest 32k. This is a very important level we need to remain above on the higher time frame to prevent the monthly trend weakening, right? If we break below this level, we enter a weekly downtrend towards 32k. 32k is the point of which we entered a monthly uptrend on. If we look at 32k, that is the point of which we entered a monthly uptrend on. If we break below 32k, the monthly uptrend is at risk of failing. You can see the monthly uptrend as reflected by this uptrending diagonal trend line. So a loss of 38k puts us at risk of retesting that trend line. And we do not want to be retesting that trend line. We want to keep this trend angle nice and strong, nice and steep moving into the bull run, guys. So definitely keep that one in mind as well. Let's go back to the short-term chart and discuss what is happening from a very small time frame perspective. So as you can see, guys, we have come up and we have retested 44.2k, a very important level of resistance that we are currently retesting. The price action is very much still choppy at this range. What we can see, of course, is we have this overall uptrend developing. Now we can draw this in multiple ways. We'll take it from our wick low upwards. We can see we are broken down very slightly on here. I wouldn't be really considering this as a very high confidence uptrending support line due to the fact this was just such a significant liquidity grab. What I'm really looking for on the chart right now is our horizontal levels of support and resistance. We know that we have a major level of horizontal resistance right over here at 44.3, 44.4. If we zoom upwards, we have got a diagonal resistance developing as per this downtrending resistance. So we know that we have an area of confluence. We have confluence between the diagonal resistance of this structure over here, and of course we have our horizontal resistance of our broader structure. Therefore, we would assume that for the price action to continue upwards to retest this 46k range, we would need to break above this downtrending diagonal resistance. And thus, we are expecting two things. Number one, if we fail to break above this diagonal, we could assume to see a correction back towards our POC, which would be a correction back to around 42.6, potentially a small amount lower. If we do break above this diagonal trend line, that would be validation that we have actually confirmed a break above the parallel resistance of this range. That would be the bullish trigger for a continuation upwards. If you see the break of diagonal trend line, that is going to be the trigger suggesting we are continuing higher. So how could you play this current scenario? You could play it in one or two ways. You could be patient and wait for the break of the diagonal trend line. If the diagonal trend line breaks upwards, that would be confirmation of a continuation higher. At that point, the level of resistance we just assessed, which was going to be the range high, okay, this range high resistance right over here. Let's go ahead and draw it in. If I can get my pen up, there it is. This area here will flip as support if we break above this diagonal trend line. Therefore, you could take it along above it with your stop loss below this trend line. Option number two, if you are hedging against long positions, you could do the exact opposite. You could take a short between this range here with a stop loss above that trend line, looking for a correction back towards our POC and this midline of support at around 42.2k. Those would be the two scenarios I would be looking at. From a technical perspective, the technicals are really not telling us too much as we are in an overall chop zone after a significant surge in volatility. So every time we get a significant surge in volatility, we generally see this slow, stagnant, and choppy moves after that as the price slowly grinds to fill these large volatility gaps. With that, the overall momentum is generally not a very reliable indicator, and as a momentum trader, I don't generally trade off momentum. When I see moves like this, I more or less sit back and trade based on demand, support, and resistance zones. So that is how I'm playing this range, guys. I'm personally going to take a small short, keep my stop loss very tight above that level. I've got a lot of longs that I'll flip into and keep active if Bitcoin breaks upwards. At the moment, we are still in this pending zone, this waiting game, this zone of patience as we do consolidate and decide where Bitcoin wants to move into, particularly moving into the ETF news. We do have that ETF news pending in a couple of days, and that is going to play a significant role in determining where Bitcoin actually moves to over the next couple weeks. So keep that in mind, guys, and we'll catch you guys in the next one on Sunday. Cheers.